Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, September 15th at about 3 p.m. Eastern. Well, the Nasdaq fell more than 1% so far today, leading declines in Wall Street's main indexes as chip makers fall on concerns over consumer demand. You can think cars here, while rising Treasury yields pressured major growth stocks. Also stoking worries over chip demand from automakers, the United Auto Workers Union launched simultaneous strikes at factories of General Motors, Ford, and Chrysler parent Stellantis. We're going to have to see how those negotiations go over the weekend, because I'm pretty sure whatever happens is going to affect the market next week. And on that note, let's go on to three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. As you all know, this is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, when I captured this chart today, the SPY was trading at right down here, right just below the 20-day, the red line, just below the 20-day moving average. The SPY was at $443.47, or about $44.34 on the S&P 500 itself. It is trading here at 7% below its all-time highs that were made in January of 2022 at $479.98. We can call it $480. Now, we know that since the breakout in May back here, the real nice uptrend, price moved up from the March lows, moved up, did sideways along through April and May, then broke out, then broke up to June highs, then walked up the 20-day moving average very, very nicely, up to gap open on July 27th, and then rose on an intraday high that day to $459.44. So this was a really nice uptrend here, nice and neat, at times at a premium to the 20-day, but making higher highs and higher lows up to that point in July, again at $459.44. Now this high remains the high ever since. From this high, the SPY dove down below the 20-day moving average, below the 50-day moving average, fell all the way down through to this low here. On August 18th, it gapped down to open at $433.37, tried to rally in the next week, bumped its head. As I always say, what was support becomes resistance, bumped his head on the 50-day moving average, the green line, and the 20-day moving average, fell back for a couple of days, then took another swat at these moving averages, managed to get through them, and rose up to 400 right here, to $453.67 on September 1st. Now, if you will look left with me on the chart, you will see a gap here, and the low right here of that gap, or the lower edge of it, I should say, was at 453. It's amazing how gaps and price, potential price support and resistance can really have a true meaning. I mean, it really is a thing, as they say. So we stopped right here at 453. And then fell back down below the 50-day moving average, back to hold kind of steady at the 20-day. And ever since, for the past week, it's the SPY has been walking sideways, staying mostly above the 20-day moving average until we got to today. And then today it started falling a little bit with its highs up at the top, right at the ceiling of the 50-day moving average, which is now coming in at $447 and change. And of course the 20-day moving average, which is coming in at about 445. So we're just a little below that again at 443.47. So currently we do have resistance up here at 451 and again at 453 if the SPY can turn around next week. We do have support at the 20-day moving average at about 445, although we're broken through it right now. There's that little tiny pivot from last week at 443. So if in the coming week, it's going to be important to see. We've got a lot going on here. Now, next Wednesday is the Fed interest rate meeting. Well, the interest rate meeting starts on Tuesday. The FOMC announcement is on Wednesday, and that's whether they hold rates steady or whether they're going to increase them again. That's going to have a big impact on the market. So stay tuned on that, and please trade carefully and keep your protective stops in place. Our next chart today is a chart of the Invesco QQQ, symbol QQQ. This, of course, is the ETF that closely follows our NASDAQ 100 index, very important index in the market. The NASDAQ 100 includes the top 100 non-financial companies, of course, by market capitalization, again in the NASDAQ 100, including companies, stocks like Alphabet, Amazon, Microsoft, AMD, Tesla, NVIDIA, that whole group. Now, when I captured this chart today, the QQQ was trading at $370.16. Now, we know that since January, and this is what we looked at last week too. Look left with me on the chart. You can't see January, but you can see February. And since the January lows, which opened at about 268 in January, I just want to show you what a beautiful uptrend this is. The QQQ has moved ever since the lows in January. It's moved up most of the time. After it got over those March lows, everybody had to get over the March lows. The QQQ has walked up for most of the time, walked up that 20-day moving average and come all the way up to its July 19th high. So from January to the July 19th high, it rose 44%. So that's pretty good return if we were all smart enough to buy at the lows and then check out the highs here. The July 19th high again came in at $387.98. Then all trends cannot keep going forever. So it started sliding again, came down to the low in August, on August 18th. It came down to open at $355.26. Then it rallied, hesitated again at the 50-day and the 20-day, just like the SPY did. This usually happens. Then backed up again, and like the SPY, took another run at it. And came up to this September 1st high at about 381. Now, since then, it's backed off a little bit, and it's been walking. This past week fell back down through the 50-day moving average, managed to stay above the 20-day and walk along the 50-day as well this week. But today, of course, with a strike, the UAW is not helping at all. So today, we're seeing quite a bit of weakness again. Because a lot of the automobile companies, because of the strike, are saying, hey, you guys don't send us any more semiconductors right now. So it's affecting the NASDAQ pretty dramatically here. So we're right at $370.16. We're right below the 20-day moving average, which is coming in just very close at $371.12. And just to top that, the 50-day moving average coming in, we'll call it $373 to make it even. Now, we've had a really nice uptrend here. Uptrends don't go on forever. As I've told you all a million times, the industrialized nations, the financial markets, the stock markets of those nations, we move in cycles. We don't move straight up and hopefully not straight down forever. So we do have bumps along the way. We've had a really good, we can't complain, we've had a really good year, but right now the NASDAQ has really pulled into a rest stop. So the Qs do have near-term resistance here at 381, and we have near-term support down here at 354. So keep in mind in the coming week that the Fed decision and the outcome of the UAW strike is going to affect these stocks. So as I just said, please keep your protective stops in. Finally, today we're going to look at a daily chart of the Van Eck Gold Miners ETF, the GDX. I'm looking at this with interest right now, and I'm not, of course, I'm saying I'm going to do this or I'm going to do that next week, because this weekend's going to be very, very important to see what happens with the strike. But I am pledged to keep an eye on the Van Eck Gold Miners ETF, again, the GDX. It has 57 holdings. Top holdings include Newmont Mining, Barrick Gold, Agnico Eagle, Goldfields, Wheaton Precious Metals, and so forth. Now, when I captured this chart today, you can see that the GDX was trading at $29.74. Now let's look left on the chart here. After climbing in a really steep uptrend this year, really, really steep. And look, guys, when you see an angle like this on nearly any asset, just trail your stop behind it if you're on a reasonably short-term trade, because at some point, it absolutely is going to come down. This was a sweet run up here. It started from the lows down here. It had a little double bottom, we can tell. And these lows were down here at about 26. So from that point, and it was in March, and as I said, everybody had lows in March, so did the GDX, and after making a little double bottom here, it started climbing, and it climbed up to make a double top in April and May at about $36, okay? So made a top up here in March at about 36, fell back down here to possibly about 33, rallied back up, couldn't keep going. The buyers put their hands in their pockets, said no more. So we formed a double top here. It broke through the support zone and came back down. It fell back down to the 200-day moving average to a low at $28 here and 76 cents, then rallied up to $32.95 in July, then fell to the lows of 27 down here before jumping back up to the 50-day moving average. So a lot of activity going on here as people decided whether they really wanted to buy gold for it to hedge for inflation or not. So I'm looking at this as a trade, a possible trade. So in the coming week, with everything I've looked at today, and not knowing what the weekend's going to hold, in the coming week, if the GDX, and look how it came down here, made this low, as I told you, in August at 27, and then rallied back up. Now, it isn't yet. Could this possibly turn into a bottom reversal pattern known as a cup with a handle? I don't know yet. We've got the cup and the handle, but then price usually, what it does usually is it goes along a few times here, just sideways, and then breaks out. If that happens, is golden. But what I'm saying here is I'm looking at this again as a trade. The GDX is trading at $29.74. The 50-day moving average is coming in here at $29.67. So in the coming week, if the GDX can climb above and stay above the 50-day moving average, so write this down on your note, on a note somewhere, the 50 days coming in at $29.74, or make it $29.75 if you want. If it can climb above and stay above the 50-day moving average, I may add a small position to my trading portfolio with my protective stop. I'm going to come down here under the handle. My stop's going to be at $27.94. If and when the GDX can move above the 200-day moving average, which is now coming in at $30.67, I will add to my position, and of course by then I will be trailing my stop. So you may want to keep an eye on the GDX in the coming week. And now, if you'd like to become a more successful trader, and if you're kind of sitting around on the sidelines, during the day saying, gee, I don't know, I'm watching the market, I'm not sure what to do. If you're doing that, this is a perfect time to get some studying under your belt and learn ways of expanding your knowledge. So this is the perfect time to check out my online training programs. You can choose from 10 different programs, including our popular flagship product, 7 Steps to Successful Trading, always an all-time hit. If you'd like to learn how to swing trade, trend trade, bottom fish, and more, check out these timeless programs. They will show you how to elevate your trading skill set and how to increase your gains quickly and easily. Go ahead and check out all of my online training courses by going to the link on this screen or simply clicking on the orange button below. Until next week, be careful out there. Keep green on your screen. I'm Toni Turner, and this is The Market.